Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, October 12th, 2017. Wanted to go over some trade ideas here. I'll start. I have both a handful of long trade ideas as well as some short trade ideas. I'm going to start with the short trade ideas. If there's enough time in this video, I'll cover the longs. Otherwise, I'll do those in a separate video. We'll keep it simple right now. We'll just focus on two different sectors. One of those sectors has an ETF. That's this one here. We're looking at the gaming sector, casinos, and those type of stocks. So this is BJK, the VanEck Vectors Gaming ETF. I did a video recently on this, on the casino stocks. I believe it was a video that I covered them in, and I'm starting to see those charts play out. I think there's some opportunities here on the short side. The charts are pretty clear to me. So what we're looking at is a 2-year daily chart of BJK. Back here in 2016, we had divergent top. It was a series of two consecutive divergent highs, each of those followed by a correction. The first smaller divergence, we had a correction. Those divergences extended on one last thrust up, and then a pretty decent correction. This sector is pretty conducive to trading. That's why I like it. I revisit these stocks from time to time. That was about a 12% drop on that second one. So now it's been a year and we've come full circle. We had a divergent high with a correction, and that was a pretty decent correction off that first divergent high. I'm just measuring the drop. I can't grab the top. It'll move those trend lines, so I'm going parallel to that. And that was a drop of about 6%. We pushed on up, made another second divergent high. This is also, you can see here, I have this minor uptrend line, which was broken here, and we back tested that, and we're rolling over at this extension or consecutive divergent high. So from here, I expect to move down at minimum back to that 38.87-ish level. That's about a 9.5% drop, and this would be my preferred swing target down to about the $38 level. That's a 10 and a half, or I'm sorry, 11.5% drop if we get there. So if you're a ETF person, prefer the relative diversity and safety because you don't have the risk of any one company coming out with earnings and gapping against your position. You get the ETFs. If you want a little more meat on the bone, I always say most points in time you can do better sniffing out the most bullish or bearish stocks within a sector that you plan to trade and going either long the bullish ones or short the most bearish. So let's just take a look. There's not many here. Here's a related items list. The holdings within BXK, and I don't know if there's any more than that. I'm sorry, BJK. There may be some more, but that's what my chart program here is showing. So here's Las Vegas Sands. I had this divergent high back here in late 2016. You can see we had a breakdown, back tested, divergent high. Those are the things I like to look for in the daily chart. And then we dropped. I'm just again going to the parallel to where that point was, and that was about a 19% drop on that divergent high. What happened again a year later? We've come full circle, almost a divergent high. I mean, that's slightly lower high. That's an island top. Remember, we had a recent short, didn't work out on NVIDIA with an island cluster top. There's an island top. You have a gap up, and it's left alone, an island standing there, and then you gap down, and that marked that top, and that was a nice pullback there. That was, a drop of about 10%. So at this point, again, what I'm focusing on is we had an uptrend line here. It was pretty well defined. We broke down, back tested, found support here around the $60 level, back tested again. Now we're rolling over and starting to move down impulsively. So again, we fell just, basis points below making an equal high, and that would have put in negative divergence. For all intents and purposes, that's negative divergence. So there it is. And this one's going down, I think, at least that 56.35 level, quite possibly more. Those are all potential targets. And if I make any of these official trades, of course, there will be targets there. Looks like we froze up here. There it goes. MGM, same story, divergent, bearish rising wedge with divergent high. This must have been an official trade because it looks like we had two price targets. The second was hit. Stock went just a little bit lower and then reversed. So we caught that one. And these patterns are just very clear. The trend line breaks, a divergent highs, trend line break. We had a divergent high here. We had a correction. We had another divergent high. Remember, each of these peaks in the indicators, the PPO and RSI I'm using below, you can see prices making a series of higher highs, 1, 2, 3, with the indicators making lower highs. Each one was good for a correction. You could certainly swing trade. Those are decent drops. If you depending on how much you're putting in, 13% drops each of those times there. And now this has just been an extension of that same negative divergence that's been persisting. And what we've done is we've tapped along this 30-10 support level. Look how well defined this is. And I'll tell you something. There's no certainties or absolutes in trading or technical analysis, but typically the more reactions you have, we have a lot of reactions here, we have a lot of reactions here. That is an extremely well-defined, very technically significant support level. And from my experience, the more reactions you have, the more technically significant it is, meaning a lot of eyes are watching that. You don't have to be an expert in technical analysis to look at this chart and say, wow, 3010 is a very solid support level for MGM. Therefore, it would only make sense, and the divergences indicate that if you didn't have the divergences and you're bullish on the sector and the sector charts look great, you would say, okay, wow, what a great buying opportunity. We've got another dip down to 3010. And maybe it is. Maybe you can buy here. I can tell you this. If you're bullish, you don't like to short stocks, you think the market's going higher, you think the casino stocks are going higher, on a 1 to 10 scale, 1 to 10, this is a 10 for being objective, going long here with a stop not too far below, maybe on a closing basis. You go long for the next rally up to at least those highs. It's been trading in this range. However, based on everything I've just talked about here, I'm looking and ready to position for a break of 30-10, and then a move back down. That's a pretty hefty top, basing pattern, or sorry, a topping pattern up there. And I haven't identified any targets yet, but I could see no problem based on that pattern. Usually you can just take similar like a double or triple top pattern, which that is. You take the distance of the pattern, which I've done here, and you measure that, and let's do it here. So that measurement there, and you add that down to the bottom. I didn't do an exact line, but that comes in right around here. So let's just say roughly that 2580, which was that final target there, somewhere in there, that would be the target for MGM. And that would be if we get down there, you're talking about a 14% drop. So there it is. Win. Uh, Looks like an ascending broadening, or just a broadening wedge pattern, megaphone pattern, broadening wedge, same thing. We're at the top of the pattern now. We also have negative divergence, just as we had negative divergence back here before the stock dropped 24%. So based on this chart, I think this one's headed down to about this area here, about call it 119. That's about a 17% drop, and quite possibly down here to this support range. That's about a 25% drop in win. So again, when I'm quoting these, where I think these stocks are going to drop, I just mentioned 25%. That's a lot more than I think what you'll get in BJK. This is MLCO, Melco Resorts. We have negative divergence, a nice uptrend line to watch. We're up at the highs on this one. So at the very least, this one's probably going to come back in and test this trend line soon, especially if the sector rolls over. Because remember, guys, birds of a feather flock together. Casino stocks, even though some of them may be in different states, they may have different business models, the sector tends to move pretty much in sync. And so this is something along the lines of what I'd look for on that one there. As far as sell signals go, you don't really have any well-defined supports. You could put a trend line in here, but you'd have to fudge it. I don't see a lot of clean reactions off that level. We had a little minor uptrend line here that broke down. So again, how you want to trade, it's up to you. GLPI, Gaming and Leisure Properties. There's your uptrend line. Not super well defined, but we do have divergence. We have two consecutive divergent highs there. That one's starting to play out, move down. At very least, we're going to come down to this level here. I should have a support zone. There you go. And we already tagged the top of that level. Not one of my favorites, but just thought I'd cover it since I'm going through all these components here. IGT, I don't see much in that chart. This one, Churchill Downs, nice. Look at that wedge, very well defined. This is a clean pattern. So you have negative divergence, rising wedge, and an uptrend line. So there's your short entry, a break of that uptrend line. And I expect a little minor reaction there around 196.34, but I think these are the targets you're looking at, about 186.31. 179.29 and 170.42. Those are the actual support levels. They're not adjusted for an optimal fill. I always set my price targets a little bit above the actual support levels on short trades. BYD, another megaphone pattern. at the top of it, negative divergences, and just a solid support level here around 2136. So ultimately that one could work its way down there, and that's about a 23% drop. TSG, the stars group, divergent high, support down here right around, and a trend line support 1705. Looks like it's been compressing in a tight range lately. So this one looks to be about a 14 or 15.5% drop if it comes down to that level, just over 17. And finally, Penn National Gaming. Here's your nice, well-defined uptrend line, yellow uptrend line. Two divergent highs. The first one played out for a correction. You also have a minor uptrend line here, which may come into play. So you can see the divergent high. So this one I expect to play out somewhere along these lines. Once you sell signal to come in to break that yellow trend line, probably a reaction off there. There's also a little bit of support around that level, and then a continued move down to about that 20, call it 2030-ish level, somewhere in there. All right, that's the gaming sector, and now we'll just go over one more, the airline stocks. Okay, the airline stocks, I don't see as much meat on the bone. These are just more of quick pullback trades. They were shorts. I mentioned them. I did a video on the airline stocks in this rising wedge, and they played out perfectly. If you go back, just type in, I don't know if I use XAL in the symbol. If you type in any of these airlines, the big ones, Delta, Southwest, American, here's the tickers on the airlines. You'll see that video. And here was a rising wedge. I pointed out this was the widest part of the wedge, which is a simple but very effective tool to try to gauge how far a wedge pattern will play out, whether it's a bullish falling wedge or a bearish rising wedge. Take the widest part of the wedge pattern, which I must have done in that video because that's where it was, and gave this target of I had also a support level here, and that was a target. And you can see this is technical analysis. That's the line I had. I don't believe I've modified that line since. Well, that looks like it was created back in last updated, created back in 2016, updated on July 21st. So I haven't moved that trend line since then. And you can see to the penny. And that's technical analysis. Okay, so hopefully some of you were able to profit from some of those trades, and now we've come full circle. We bounced back to resist. I think I even covered when they were there too. When the sector had fallen there were a few potential unofficial long trading ops, and so a lot of the airlines have bounced as expected. They met their wedge target. Now, um, what it looks like here, we could continue higher, but I think we pause. This is a resistance level, more so on some of the individual airlines, which I'll get to in a minute. But either way, we've had a nice bounce back rally already. Looks pretty extended. We went from oversold on the RSI all the way to overbought. And so at the very least, I think they're now due a little pullback here. It might not have to be too deep, but just maybe a quick trading op, three, maybe more than a 3% pullback. You look at a weekly chart, I can certainly make the case, as I did before, I believe, for a major top in the airline. So when swing trading, if you're of the mindset, I'm showing you these setups that they might play out for a lot more. You're a trend trader or an investor. You can certainly short some of these airlines here with a stop not too far above and either trail stops down or leave your stop in place and allow for a runner. A runner is a trade that can continue to play out for much more than these shallow, what I call swing trade targets. So let's just run through the airlines real quick. Here they are again in order of descending order of market cap. So that gives you an idea too about liquidity and the relative safety of trading these. And when you get down the list, the smaller the market cap is, the more volatile the stock is, the more inherent risk there is in the stock. This is Delta, DAL. There was that pattern I showed you back then in the video, broke down, just a beautiful, right down to the target, bounced. And now point being, this line here, and again, I haven't even modified these lines in a while. This one's back from August 4th, 2016. This is the last time I touched this line. You have a lot of reactions here, and now we're at that level. Sure, we're a little bit above it. This is what I call, you guys hear me use the term a lot, momentum fueled overshoot. We had a near vertical rip from right here, and it's very common, almost expected when you have a lot of velocity, either on the upside or downside momentum, leading downside leading into a support level, upside leading up to a resistance level. You get what I refer to as these momentum fueled overshoots, where you overshoot the resistance level and then come back in. And then it does end up acting as resistance. Same thing on the downside, you tend to overshoot support levels when there's a lot of downside momentum, and then bounce off that level maybe after a brief overshoot. So there it is. So that one's technically right there. You want to wait till it falls back below there. That's one thing. And again, pullback trades. I didn't mark targets up. I'm going to go through these fast to wrap this video up here. There's Southwest, symbol LUV. Same line again. I've had this line here forever. Came down here, overshot that target a little bit, and now it's up against resistance. Uh, AAL, yeah, is American Airlines. Not one of my favorites. Move on. GOL, rising wedge, negative divergence. Wait for a break of this trend line. This one didn't really get hit as hard as some of the other ones. This is not a U.S. airline. I forget where this one's based, but there's a potential target there about 1915. A little support. That one might move lower. You can take a measurement pattern on the wedge if you want. RYAAY, Ryanair Holdings, another non-US airline. Uh, Not one of my favorites, but it's corrected so far, but it hasn't had as much of a bounce back. UAL, United Continental, overshot the support level a little bit, but came up. Look, a very, very formidable former support, now resistance level, and it's already started to reverse. I mentioned these, I think, in the trading room yesterday, the airline stocks as shorts, or the day before when they were bouncing back to support. Same thing. ALK came down, hit this target, bounced off it perfectly, and right back to a pretty solid, significant resistance zone. Again, look all the way to the left of the chart, and you see quite a few reactions there. LTM, this one never really had much of a correction. This is another non-U.S. airline company. And there it is. There's your negative divergence. Long-term uptrend line to watch. When that uptrend line goes, I give you one more target. You have an earlier target here where I would certainly expect a reaction. That's a significant level, about $11, and then it might work its way down to 987. Again, trend line break would be your sell signal on that one. JetBlue, JBLU, trendline break, it broke down, hit that target, it's bounced. I don't see an objective short, but the trend's still bearish with this PPO below the zero line. I didn't mention that on some of the others. That's something else I'm looking for. CPA, let's get away from that one. Save, nah, too stretched, and I don't like the bounce enough right now. I wouldn't mess with that one. SKYW Skywest. There's a little trend line. You can see that better on the 60-minute chart. It's not rolling over yet, but it's pretty extended. It's probably going to want to come back in here. I would put that line up to right here now. Test this level, retest those highs at best. At best case scenario, I think that comes back into about 39.60. Could go down, all the way back down here. Ultimately, that's about 30.50. HA, Hawaiian Holdings. Divergent low. This one, I had this measured target. Let me move that away. This is a pretty significant support level here. So what I'd like to see in this one is a potential long trading op. You need the sector to confirm. It would help. But another thrust down to right here to that support level, it would put in divergent low. We had divergence here, but I don't think this one's ready to go yet. Sometimes you get divergence, it needs that second or third divergent low or an extension. It's really an extension of the same divergence. So that would be a preferred scenario. So if you're looking for an airline to go long, this one's certainly corrected quite a bit already. It's fell from 60 to now 39, and if it gets down to this 35 level and that divergence is still in place and the airline sector confirms, I think that's a pretty objective long entry there with a stop not too far below. ALGT, Allegiant, uh, there it is, bullish falling wedge, broke out, ripped up, it's hit resistance. I don't know, this one might want to continue up there. I guess these were targets that I had for that wedge pattern, 147.27. At that point, I'd expect a pullback trade. It looks like this was the first thrust up, a little flagging type action, a little consolidation, and it's thrusting up again. Might want to make it up there, so I really wouldn't touch that one. Not a lot of meat on the bone. VLRS, another non-US company. It was an inverse head and shoulders pattern. Note just means I was too lazy to write out left shoulder, head, right shoulder. That was the projected measurement for the pattern. It didn't make it all the way there, and then it turned around and reversed. But what's interesting to note is if it goes any lower or even equals this previous low, which it's almost to now, let's just move that line down there. Yeah, we did. We just hit it. So there's a stock with a strong bullish divergence. Again, the U.S. airlines look poised for a pullback, but this is not a U.S. airline, so maybe it has its own fundamentals and different things going on down there. Um, so you just watch it, maybe see if it reverses here. You could take a shot at it, most certainly around 1150 with stop on a daily or weekly close below that level. and any of those could be your targets. AVH, I don't see too much there that stands out. And this was what happens when you trade stocks with the ticker Q. It means they're in bankruptcy proceedings, and one day they just stop trading. So be careful when you're trading stocks, below $1, especially, with the Q at the end of the ticker. That just means that they're already in bankruptcy proceedings, and rarely do they ever come out with any value left in the stock. They usually restructure and the stockholders are wiped out, and they issue new shares if the company is going to continue, and you don't get those shares normally. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.